Good morning all and welcome to today's video. So today I have four pairs on watch and those are Swiss yen, Euro Kiwi, Aussie Kiwi and Pound Dollar. So I'm going to break them down for you now. I hope you're doing well, by the way. I hope you're having a great week so far. The date is Wednesday the 18th of October as I speak. So let's break these pairs down for you now. So Swiss yen, why am I looking at this? I'm looking at this because you can see we are at an all-time high. So potentially I could be positioned very well for the shorts. Okay, you can see we're approaching this all-time high, which was set in August, and we are pushing up to that area of value as I was anticipating. Now, what do we know about these all-time highs and all-time lows? What do we know about highs and lows on the higher timeframes in general? Well, if you've been watching my videos, you will know that typically speaking, we break these highs before pushing to the downside because we typically get people caught the wrong side of the market. People believe that this is just, they listen to media narratives, and when it breaks above, they hear stories about Swiss yen or whatever pair they're looking at all-time highs and so forth. And I remember when I first started trading, initially I used to think, well, it's just going to keep going. I need to buy this. I was demo trading at the time, but I need to buy this. So you start buying, and then after a while I started to think, hold on a minute, why are the brokers putting out these news stories? Why are they trying to encourage you to take money from them? That doesn't make sense. They're a business. They are there to make money from you. So surely the reason they're putting this kind of news out is because price is going to do the opposite. Okay, so that's when a little while later, I discovered Falcon, the community which I'm in now, and that this is the Falcon strategy which I'm trading. And I started to think, and then I started to learn about mass psychology, where people were thinking the same as me, that this is just going to keep going. So it breaks above. The news narrative is that it's just going to keep going to the moon. It's going to keep going to the moon, and then what we see in the majority of cases is it comes crashing back down. And of course, people believe support and resistance traders, which is typically how people start out trading. Some people do trade support and resistance successfully, but they believe what was previously resistance becomes support once price breaks above it. Okay, what we typically know as well is that price tends to react from the top or the bottom of pieces of structure. This is something I observed in particular a few weeks ago in my ASR, which stands for Advanced Self-Review, where we review our trades and our performance over the week. And one of the things I reviewed is that when price happens to be at the top or the base of a structure, such as this, so if this 1, 2, 3 wave move with a 1, 2, 3 wave move in the middle, this is typically where price reacts aggressively as well. Okay, so that makes sense why we would likely react from this area. I said to you, if you watched my previous videos, given that these are psychological patterns which we trade, that, I was looking for, where was it earlier in the week? I was looking for price to break up here potentially and break back in. However, I said that we could potentially form like a piece of structure before that happened. Because we typically see these structures, what we call an ending structure, near an area of value, where we get this kind of FOMO leg, and you can see that FOMO leg potentially here, okay, where price moves down correctively. So people are trying to sell this, but it hasn't quite reached the area of value, which even many of these people that sold it may have been looking at, but they just got short because they feared, some of them, that it was going without them. And then in the majority of cases, price pushes up. So this is just a little bit of an ending structure by the looks of it. You can see we are building some volume here, which I am mindful of, because the more volume we build, the more likely we are to break out higher. And if we build too much volume, then price could be doing something altogether, and we may be, if it gets very voluminous, we may be seeing something like this, and then we have kind of like a larger structure, okay, where we end up with something more like that. Okay, but just these are just things to be mindful of. So what I'll be looking for, if we just measure the waves, so if we assume that this is a completed piece of structure and that the impulse out of a correction tends to be the continuation out of a correction tends to be of a similar length to the impulses which has preceded it. I've just cut through this wick because you can see it doesn't appear on the line chart. And if we flick to the 4 hour, it's a big wick. On the 1 hour, it's a big wick. And even on the 15 minute, it's a big wick. So when we see it like that, typically speaking, this is just volatility. So if we assume that we have an impulse correction potential continuation here, and we just measure that, excluding the wick, that would take us up to this area here, okay? So which would be in alignment with what we've just said about breaking above. If we measure the length of the correction, typically price will break above by a similar amount. So if this is the correction and we break above by a similar amount, that would also take us up to here as well. So these patterns that we look for, I'm kind of measuring them loosely, but there is mathematics involved, okay? So that would also tie in with a break above before a potential break back in. Okay, so with all that in mind, what I'll be looking for is the following. I'll be looking for price to tap into this area, but more likely now that a break above, which just so happens to be where I've just measured using that rather crude but accurate measuring way of measuring that we have, and I would be able to manage this down to the base. So if we broke above, broke back in, and we got a flag which would likely replicate this depth, meaning that potentially it may not be ready by the end of the day, if it even shaped up at all. But if we did break above and break back down, and we got a flag of this sort, then I would look to get short on the break of the flag with a reduced risk entry or a risk entry within it, so like that. And then I would be able to manage this down to, I'm not really concerned about this so much, but down to the base of this this ending structure for something in the region of 3.63%. Okay, so I'd be able to, if we did react from there and form something larger and then break above again, then I would be able to manage this and potentially lock in a little bit of profit, even if we reversed and price became it became a little bit more complex what price was actually forming. So that is Swiss yen. I've just reset the order that I initially had there that was tagged by this candle, and that is what I'm going to be looking for from Swiss yen. So Euro Kiwi on the higher time frames. Let's just have a look at this. So on the higher time frames, we have, what do we have? We have this high here. We came all the way back up. We near missed it. Okay, when these near misses often get filled when we get close to an area of value and we don't quite tap into it and we push down. These price will often scoot back up to take out the high that it near missed before the bigger moves to the downside, particularly when we have a bullish wick. So when we have a green candle with a big green wick above it, on the downside, these will usually get filled and we will usually take out the high before pushing to the downside. We then do break the high and we push back in, okay? So we break above, wash out all the orders and break back in. We then have this high here, this sharp move up, sharp move down. We near miss to that area again by way of this high here. And then we come all the way back up in the form of an ending structure where we have a 1, 2, 3. We have this 1, 2, 3 wave move. We break above, stop everybody out, tag the limit orders, and then price pushes down aggressively. You can see if I was to just extend this now, we're kind of trading below this to some extent, so that's a tick in the box. Not really too concerned about that because this is kind of a completed piece of structure. So you can see as we drill down that we have this series of, well, we don't start so well. This is partly why this is lower down on the list, is because this is not typical at the start of a sequence. So if we are going to push all the way down to what we call the 90% rule, the start of a piece of structure, the moves don't usually start like this. We usually get tighter flags into slightly larger flags, which would look something more, something more like that, as opposed to something which looks more like that. Quite a large correction. We don't normally see that so much, but sometimes that can happen. But I'm not too concerned about that. You can see we kind of dropped out of that and then we went into slightly tighter correction. What I'm more interested in at the moment is that we had this sharp move up, sharp move down. And I said to you in yesterday's video, if I just drill down, that I was looking at this as a 1, 2, 3. And if we just measure the impulses here, so within this impulse correction continuation, and we assume that the leg out, even if we take it from here, is of a similar length, we've well and truly superseded that. Okay, so that is potentially completed, and then we have this kind of what I was looking at as a potential head and shoulders pattern here. So if we measure this here, we tend to break above by the same amount. We've kind of done that now. We've tapped into that area. If we take this, we kind of corrected our way up and then started to impulse here. If we just measure where the impulse happened here, and then we assume that we break above by a similar amount, and if we take it on the break of the correction, that would also take us up to here as well, giving me a clue that this is potentially completed. Okay, and that we've likely tapped into this area by way of this 1, 2, 3, and that we will likely break back down and flag. Okay, so with all that in mind, what I'll be looking for is the following. I'm not too sold on this being a flag. We do kind of have a flag forming here, but when it forms immediately after a larger correction like that, this could be part of something to push higher. So we could end up, with something like that, which ends up pushing higher. So I'm not too sold on that, particularly when it's only made up of one candle. That's another thing I noticed from my documentation, that some of my losses, that's why we document, are when quite a few of my losses were when the impulse was only made up by one candle. Okay, you can see it is two candles, but that's on the 15-minute chart. On the 4-hour chart, it's just one candle. On the 1-hour chart, it's just one candle. And a lot of the time, these can retrace, okay? So what I'm looking for is just a bit more of a push down. I did forecast that I wanted to see a push back down below this area of value, and we're not really below it at the moment. So I want to see a bit more of a convincing push down, and then more likely a flag, which is kind of more symmetrical to this correction to the left. And then I would look to get short, and I would be able to manage this down to this first inflection point, not concerned about this so much, but down to this first inflection point for something in the region of 3.25, which would mean I'd be able to lock in a little bit of profit, as well as getting my risk off the table. And of course, if we got the correction, if we got the risk entry within the flag, then obviously the risk to reward almost doubles. So I've got an alert set just to see if we can push down here. It is worth noting that we have CPI data coming out from the UK at 7 a.m. and it is currently 6 a.m. as I speak. So we might get a slightly slower price action until CPI is out of the way, given the correlation between the European Union and the United Kingdom. But we shall see. That is what I'm going to be looking for from Euro Kiwi. Aussie Kiwi, if we just drill down, you can see that we have this 1, 2, 3, which taps into this area with this 1, 2, 3 wave move. Whoops. Paintbrush tool not playing ball again. Right, there we go. So we have this. We just measure that. Impulse, correction, continuation. We measure that from the base of the correction there. We could have pushed higher, but we've done enough. We've had that impulse, correction, continuation, which is of a similar length, the leg out as the preceding impulse. We tap into that area there, that high up there, and then we push down aggressively. As I've said previously, one of the reasons that this is lower on watch is because we kind of have this near miss up here, but I'm just seeing this as potentially, we do have to be mindful of this, okay, because this is one of these where we've pushed up with some aggression, right? So we could be taking out that near miss there to then push lower and potentially move even lower, and then we would have that impulse, correction, continuation. However, there's a key detail here. Okay, we have pushed up here, and for that move to take out this high and potentially this one to occur, the next thing I ask myself is, where did we react from? So if we pushed up here and this is an impulse, correction, continuation to push higher, what have we actually reacted from? Okay, we have a completed piece of structure here. What have we reacted from on the downside? And I can't see anything down here that we reacted from. That gives me a clue that this is potentially just a scoop back up to this sharp hook point to then break below, to then potentially take out this low and potentially this low as well, particularly when we have this 1, 2, 3 touch structure there with a 1, 2, 3 touch structure leading up to it. Okay, so we corrected below this low and we didn't tap into an area of significance for a move to the upside. And if I just measure this impulse, this is something I'm trying to do a little bit more of, as you may have noticed. if we just measure that, so if we assume that this is an impulse correction continuation to push lower, we kind of haven't fulfilled all of that move, which also ties in with the move down to here, as does the fact that if we just measure it from the break of the correction as well, okay, that would take us down to here. And the reason we measure it from the break as well is because often the volume that was built up in the correction within an impulse correction continuation dictates how far out we will break, because the more volume we build up, typically speaking, the more we break out to the downside, because as a lot of these people bail out their positions, okay, which would also take us down to here as well, okay, and we've not fulfilled that move either. So with all that being said, what I'll be looking for is the following. You guessed it, a break below. In this instance, because of how much aggression we've actually seen, especially within this last leg here, and because there's not really any structure leading up to here, what I'm going to be looking for is just a bit more of an aggressive move down, which would likely happen where price corrected last. So it corrected there, you can see. So what I'll be looking for is price to break, show its hand, push down aggressively, correct, and then that is usually the bigger players stacking their orders for the next leg lower. And then I'll be able to manage this down to these lows here. If we tapped into these lows, then it's likely the case that we would find our way all the way down to the bottom before price did anything else. And I'll be able to manage the trade for something in the region of 7%. And of course, if we've got the risk entry within the flag, several percentage points more. So I have an alert set to see if we break below. We could do. How did we break this area of value? You can see we've broken it correctively. But rather than try and guess, because this could be a bull flag to push higher because of the aggression that price has shown to the upside, rather than try and get involved in that, I'm going to wait for price to show its hand and drop out of this correction, drop back below here, and then we'll see what happens. So last up is pound dollar, just for a potential, what's something there. Let's just take that off the chart a minute. So pound dollar, just a little potential shorter term play here. So on the higher time frames, you can see, so on the higher time frames on the weekly chart, you can see we have this, we broke below here, we pushed up, and we formed continuation to push higher to potentially take out this near miss to this high here. However, that doesn't mean we can't capitalize on a shorter term move to the downside in the meantime, okay? You can see that we've pushed down with a lot of aggression. We have this impulse correction continuation to potentially take out this sharp move here. Price has completed a 1, 2, 3 touch structure here, so it doesn't really need to come all the way back down to here, because this is a completed piece of structure and it's done what it needed to do. However, there is a sharp move here. So what I'm just looking for, just speeding up ever so slightly, we have this impulse correction continuation. Okay, so that is potentially a completed piece of structure. We then broke down below this corrective move up and below this high and this high as well, which near missed to that area with a lot of aggression. So I'm just looking for a very short term, or potentially short term, we never quite know what's going to happen, a shorter term move from there to there, which if we just measure that from top to bottom, lines up exactly with that low. I didn't actually measure that, just literally just done that on the fly, which would make sense. And of course, if we use the volume to measure the correction, we would push all the way down to there and break the low. Okay, so there's a potential move there. What do we have? We have that sharp move up, sharp move down, and then that 1, 2, 3. Because of how far into the move we are, I'm not going to be looking for a risk entry, which is essentially where we call the top of the structure. You can see if we measured this, I'm measuring this impulse to here, and that impulse correction potential continuation, that would take us up to here, up to the area of value as well. And if we measure, even if we measured this, and we assume that this is an impulse correction continuation, which is basically me trying to determine when a move has completed, because that's typically the completion of a piece of move, that would take us up to here as well. So an impulse correction continuation. So with all that being said, what I'll be looking for is the following. If we tap into this area and push down, because of how far down we are potentially into the higher time frame move, I'm going to be looking for a push down, an insurance entry followed by a flag, and then I'll be looking to get short on the break of the flag or within it, and then I'll be able to manage it down to these lows and get my risk off the table and potentially take some profit. That is what I'm going to be looking for today, folks. I have an alert set just below the area of value. And I hope you've enjoyed this video, and I will be back with another video either tomorrow or more likely the day after. Thanks for watching.